chairman of the SEC, Gary Gensler, just released a video about how $1.5 billion, that's billion with a B, $1.5 billion is stolen from retail traders and investors every single year. I haven't watched the video yet. I figured it'd be fun to watch it together and do a little bit of a live react. If you enjoyed this type of content, don't forget to hit the like button and join up with the Moon Gang by hitting the subscribe button. And with that out of the way, let's rock. As a really quick FYI, this video was posted on Gary Gensler's own Twitter page, and if you're looking for the date, it was posted on February 21st. More than 90% of retail investors' marketable orders are routed to a small group of off-exchange wholesalers known as market makers. The lead one is Citadel and the second one is Virtu. Between those two, it's pretty much a duopoly. There are other players, but Citadel Securities and Virtu really control the lion's share. I think retail investors deserve the full benefit of competition. The annual competitive shortfall could be worth $1.5 billion, money that could go into investors' pockets. I haven't watched this video yet. I want to do the live react with all of you, but my initial instinct is, if you know there's a $1.5 billion problem, why aren't you doing something about it? Let's give it a listen.
What do auction houses have to do with the stock market?
Office Hours with Gary Gensler.
Auction houses bring buyers and sellers together for sales of items in a competitive way. It could be sales of baseball cards, antique rugs, and other items. If you're selling something, you can often benefit from the transparency and competition of an auction. We see some examples of auctions in our financial markets. Stock markets, for example, use auctions at the beginning and end of the day.
Quick side note, that opening and closing auction, that's actually kind of the importance of where your stock is listed. That's the advantage of that exchange listing it. So some are listed on the New York Stock Exchange, others are listed on the NASDAQ, but yet throughout the day, you can trade on either. Well, that's one of the big differences right there, is the exchange on which the equity is listed, they get control of the opening and closing auction. Just a little bit of a side note.
To determine the price. The goal is getting the best out of competition. Now, there are many ways to instill competition in our financial markets, including through enhancing transparency, broadening access, creating a fair playing field, and auctions are just one of those ways. Let's look at the current market to see why it would benefit from greater competition.
Why does it always feel like he's
an investor? Put
filming
in
this
order
with a gun
to
to his
buy or
head.
sell 10 shares of stock. You might think that your trades benefit from robust competition similar to an auction, or perhaps that it would have the transparency of a lit stock exchange, right? Well, actually it turns out that more than 90% of retail investors' marketable orders are actually routed to a small group of off-exchange wholesalers operating in what's called the dark market.
All right, just for more clarification here, there is lit exchanges. You could trade there. That's the New York Stock Exchange, the NASDAQ, IEX. There's around 14-ish major ones of those. Then you could also go to what's referred to as OTC, and that is what he's referring to as the dark markets. And there's two major things that make up OTC trading, also known as dark markets. That is dark pools, also referred to as ATSs. That's more of the the specific name, alternative trading systems. ATS means dark pool. Dark pool is a part of dark market trading. Dark market trading, aka OTC, that's the umbrella term. It's just literally saying not on lit exchanges, anywhere else. The other part of OTC trading, aka dark market trading, that is not dark pools, not ATSs, are market makers. That's retail wholesalers. That is your Citadel Securities. That is your Virtu. That is actually where most of this trading is happening when you're talking about dark market trading. Dark market trading is the large umbrella term, and the major amount of trading that's happening there is with market makers, but there is obviously some trading happening on dark pools, just so you know.
That doesn't seem to promote the greatest competition or fairness. The idea of
conflicts of interest for sure,
particularly relevant when it comes to your marketable orders. And that's because there's a sweetness about those retail orders. And let me say why. You see, typically,
because they take us to the
everyday
woodshed.
investors like you aren't making large trades of tens of thousands of shares or millions of dollars. So these smaller orders that you're making generally don't move the price of the stock market. And thus, there's a benefit for those brokers on the other side executing to fill your orders. I think the retail public deserves the full benefit of competition for the sweetness of your marketable orders. And I think it's time to breathe more competition into our equity market.
Here's what's happening. Say there's your favorite company, stock under the ticker XYZ. So you like it, and it's ripped a lot, and you're ready to sell it. You sell it, and because of the brokerage you're using, the brokerage and a process referred to as PFOF, payment for order flow, they don't send it to a lit exchange. They send it to a dark market, and specifically within that dark market, they're selling it to a market maker, aka retail wholesaler. Let's just say Citadel Securities. So you're in this stock XYZ, it's going up, up, up. You're ready to sell. You hit the sell button. And in this case, it ends up selling for $10. But let's say that is the current bid, and then someone is willing, the ask is currently, let's just say it's spread by a cent. So it's $10 and then $10.01. That's the highest willing bid, and then you have the lowest willing offer. That's how a bid and ask spread works. This is where market makers make their money, is by traversing the spread. What I mean by that is you might hit the sell button, and it's trading 10 by 10.01, and they sell it for 10, and then someone else is coming in there and like, well, I'm willing to buy right now. I think it's going to go even higher. So you just offloaded your shares at $10 to the market maker, and then they have another order already coming in of someone willing to buy at 10.01. So they say, thank you. They take yours for 10. They give it to the other person at 10.01. And then in the meantime, they pocket that 1 cent difference. That is a little bit of a rudimentary explanation, but you can understand if this is happening millions of times a day on thousands of different equities, all those little pennies, they very much add up. That's also probably a good explanation of why last year alone, Citadel Securities, the world's major market maker, at least here in the US, made $7 billion.
That's what we're trying to accomplish at the Securities and Exchange Commission. This last December, the Commission proposed to require that those marketable orders of individual investors of a certain size be exposed to competition in fair and open auctions. Now, the executing broker may get you a price that's midpoint or better. That would be great, but otherwise they would have...
When he says midpoint, he's referring to literally the midpoint between the bid and the ask, the midpoint in between that spread. If you get that or better, it's cutting down the spread advantage that market makers are going for.
Have to compete in good old-fashioned auctions. These auctions would include competition from possibly hundreds or thousands of other market participants to get retail investors' orders. According to analysis done by SEC economics staff, the shortfall of lacking some of that competition could be worth $1.5 billion.
That's crazy.
Money that could go back to your pockets and your portfolio and your future. Sounds like a win to me.
I agree. It does sound like a win. So why aren't we doing anything about it? If the chairman of the SEC, as of now, that is Gary Gensler, at least at the point that I'm filming this, and the retail trading public that is informed about the situation all agreed the current process of payment for order flow, the extreme amount of orders that are being sent to dark markets, particularly market makers, and not being executed on lit exchange, if that is leading to clear conflicts of interest and also transparency issues, this is verbiage from the chairman of the SEC. If he's saying that, that's just not my idea. I'm not just a guy filming this with my camera saying, hey, I think this, I think this. The chairman of the SEC is calling out how this practice leads to conflicts of interest, transparency issues. It's just a problem, a $1.5 billion problem per year. I like what's being said. I like that the problem's being identified, but it leads to the question of why isn't anything being done? I would love to get your thoughts in a comment below. Don't forget, if you enjoyed this content, hit the like button and don't forget to become a Goonie by also subscribing. I'll catch you in the next video.